Welcome everyone, I'm Dean from eWise. I'm here with our partner WeInvest, Bhaskar, to present TrackWealth to you. TrackWealth is built on eWise's patented client-side aggregation product that allows a consumer to aggregate their accounts without having to share their credentials, password and ID with either eWise or with TrackWealth with WeInvest. So Bhaskar, over to you.
Thank you, Dean, and welcome everyone to Finovate 2016. We wanted to kind of help you explore TrackWealth, which is a personal financial assistant. It helps you aggregate all your different bank accounts, be it retail accounts, be it wealth accounts, or even brokerage accounts. I'm just going to kind of start with a first kind of overview of what the platform does. As you can see, we've kind of aggregated a number of different kind of accounts ranging from wealth accounts to brokerage accounts to including my real estate portfolio. And on the left panel, you kind of see a whole summary of your numbers, if I may say so. You could see your total assets, what's your total loans and outstandings, what's there for your net worth, your income and expenses. But we're going to just start and try and add a quick portfolio, and then I'll dive back into showing you more of the platform. So you have a whole choice of institutions. Today we've launched with a lot of Singaporean ones. We're going to kind of add more institutions across the region. You enter your username, password. As Dean was mentioning, this is effectively going to be stored only within the personal data vault, which sits inside the device. So be it your mobile phone or be it your laptop, your security credentials don't leave that device. It doesn't get stored with us. It doesn't get stored with anyone else. So you just got an OTP out there. So I've got the OTP on my mobile phone. So I'm just going to enter this and let the process continue, while we then go back to kind of look at the whole dashboard which we have. So we've kind of broken it down into a variety of panels so that you can understand your financials a lot better. I think the most important piece is for you to understand how your assets been growing. So in the last 2 months, it's been 2.5%, but I can literally drag and drop this to almost any region to really understand what's really changed, where's actually my money been deployed. Originally, a lot of cash and real estate, which then has effectively moved into bonds, equities, and funds. If I just take the last 1 year, for example, equities and bonds seem to have done decently, but real estate seems to have really tanked, largely due to my exposure to, let's say, the British pound and the Brexit vote. You can then effectively look at your asset class mix, not just what today's snapshot looks like, but how has that asset class mix changed over time. So on the 31st December of each of the prior years. So you can actually analyze how your investment behavior and patterns have changed. Which currencies are you most exposed to, and how's that currency moved vis-a-vis your base currency? In this case, I'm based in Singapore, so I've chosen Sing dollar as my base currency. Which regions and countries do you have maximum exposure to? Real estate and United Kingdom being the biggest one in this case. I then have a huge bond portfolio, let's say in US. Asia is between Hong Kong, Singapore, and China. Not very surprising. There seems to be something in South America here. I can see the fact that that's the Brazilian ETF. So you can effectively get to quickly understand what's happening with your assets and where the risks are. You can go into similar analysis regarding your loans and liabilities. What's your yield curve literally looking like? Which currencies and regions you have? What are your best and worst performing investments? And how have you effectively used your cash? Have you been extra conservative? How's your cash in different currencies changed over time? Am I really kind of holding on to too much and being a very conservative investor? Which are the investments which have done really badly? And you can then start understanding your inflows and outflows. So where's the income coming in from? Not just this year, which seems to be largely from coupons from the bonds and some of the interest and dividends, but you can also go back to look at what's happened in the previous years. The same holds good from an outflows perspective. So I could literally go down and look at every single month and figure out where are the outflows. Are they largely in regular expenses, or are they in investments or fund transfers, or have I actually made some capital investments? Now that maybe we kind of got a quick snapshot of it, we could literally drill down into particular areas of interest. So for example, I've been noticing the fact that some of these fund outflows seem to be huge in some of these months. So I'm going to look at the biggest account and go down to look at every transaction which I have to really spot what's been causing some of those heavy outflows. I could then go into my funds portfolio or bonds portfolio and literally look at, let's say, an investment which I've done and seeing how effectively have I been kind of tracking the market? Have I been buying low and selling high as I should be doing, or have I just been following the market? Where effectively have dividends come in? So for example, let's take the coupons. Have I been receiving all the coupons at the regular kind of rate? And if I've kind of gone ahead and kind of analyzed my investments and I want to start setting up alerts so that I'm a bit more proactive, I could set up a wide variety of alerts. I could set up, let's say, a price alert or a return alert. I just noticed that my Brazilian kind of fund investment was more or less breaking even after a long period of being kind of in the red. So I'm going to kind of try and set a 5% return alert here. So as soon as I kind of hit a certain 5% return on this, let me be notified. I could also set up, let's say, or I've already set up a couple of expense alerts so that I don't kind of breach, let's say, $6,000 or $10,000 as a monthly limit. Soon, what we're going to also do is allow you to kind of target goals rather than just tracking investments. So coming soon is the whole kind of goal planning kind of feature, where you can allocate a lot of your assets and loans towards, let's say, 5 or 6 goals, be it my child education, be it my retirement corpus, be it, let's say, a rainy day fund, or buying a second home. And once I effectively do that, we will then be able to track not just investments, but goals as a whole. And you could sync these up at any point of time. It's completely under the user's control. You could go and delete any portfolio. We'll just go back and see the fact that we were adding the fund supermarket account, and the fact that there was a fund which the system could not recognize. We're just going to help it recognize it, and there you go. We've been able to kind of add this account too. We're offering TrackWealth as a B2C kind of feature right now, but we've also started conversations with a variety of banks, with eWise. The whole idea is look at the data which is there. It's immensely powerful.